Good morning. This is Larry McMillan with a stock market update on Monday, September 16th. So S&P has completed a round trip from near the all-time highs down to 5,400. Now we're back near the all-time highs again. In fact, we're right at the top of that previous resistance trading range area. The trading range extending from 55.60 to 56.50. So I think we're going to break on through, but if we break through here, there's still some resistance at the new all-time highs. That shouldn't prove to be much of a problem, though. Perhaps the Fed is more of a problem, but it seems like the market has baked in a Fed cut this week. The FOMC meeting is Tuesday and Wednesday, with the announcement being Wednesday afternoon at 2 o'clock. So the technical aspect is still that S&P has not broken through resistance yet, but certainly looks like it's going to give it another shot. The equity-only put-call ratios remain on buy signals. In fact, they've remained on buy signals even when the market retreated and then came back again. So I guess in a certain sense, they could say, "I told you so." Breadth has been positive this past few days, and so our breadth oscillators are on buy signals once again. And cumulative volume breadth, which is another indicator that we use mostly for confirmation of things, that has broken out to a new all-time high. That's the third time that's already registered a new all-time high in the last month or so. And usually when that happens, S&P follows along to a new all-time high as well. New highs versus new lows, that's just been tremendously bullish in terms of the fact that new highs are very strong, or large numbers of those. There were some days, though, when new lows rose up above the 100 level, but never to an extent that they were greater than new highs. So this indicator remains bullish. Realized volatility is at 15%. That's the 20-day historical volatility of the S&P 500. Anything lower than that would return that indicator to at least neutral to bullish status as well. VIX is the only thing kind of in the middle here. VIX has fallen, and so its spike peak buy signal is still in place, but it hasn't gotten back down to where it's below its 200-day moving average. So there's still some negative aspect to that fact. And so we're just living with the controversy there between two VIX indicators on opposite sides of the fence. The constructive volatility derivatives is positive for the most part. We still see this election bump where there's high implied volatility and options expiring just after the election. I'm not sure why the election would cause volatility per se in the stock market, but it looks like people are expecting that this one will. So overall, the majority of the indicators is bullish, but we do need that confirmation from S&P breaking out to new all-time highs and holding it for 2 consecutive days. So at this point in time, we're still not using a core bullish position. We're just waiting to see if that breakout happens, and we will trade any of the confirmed signals that we do have. Meanwhile, I invite you to visit our website, take a look at the various newsletters that we have that keep track of these things on a daily basis. And besides that, have a great week trading.